One thing I will say I found very interesting. I talked to Michael Saylor, who's obviously a big fan of Bitcoin and has, I don't know, 6 or 7 billion on his public balance sheet. I guess you guys will both be public soon. And towards the end of the conversation, he said, okay, he calls Bitcoin digital property, which is an analogy that works really well for me in my brain. But towards the end of the conversation, he said, you know what, Brian, you can't transact every day with digital property. You need a digital currency. And I almost said, oh, so Michael, you're not totally maxi. And he didn't really comment, but he had admitted or acknowledged or had already thought about the fact that we need a currency that's separate than property. And again, maximalists like Max Kaiser, who refuses to come back on my show because I'm talking to folks like you, and that's all right. I still love Max. But the maxis obviously are kind of in their world, but you see, and even a place like El Salvador, greatest national currency, but nobody necessarily wants to sell their Bitcoin, right? And so it's nice for me to see someone like a Saylor acknowledge that there's a real place for this currency, and I think we see that everywhere. Your thoughts?
Yeah, I think there will continue to be major sovereign debt-backed currencies. Whether Chinese sovereign debt, U.S. sovereign debt, European sovereign debt. There's not quite a European sovereign debt, but effectively fiat, right? That will continue to be the case because it will remain relatively price stable and important for economic activity in these different regions and internationally. And so that's not going away. Now, over the very long run, I am of the belief that you could see emerge synthetic digital currencies that are based on a mixture of non-sovereign digital commodity money like Bitcoin or Ether and sovereign debt-based money. And you could imagine those synthetic digital currencies having relatively stable value, especially if something like Bitcoin or Ether or both, the monetization of those in terms of just value gets into the tens of trillions of dollars, which I think it will over time. Then the balance of those and these government debt-based currencies together could create more efficient units of account for buying cookies and milk and paying rent, but that are more universally accepted or globally accepted. And we had gold standard fiat for a long, long time. We had exchange ratios that were fixed for a long, long time. And that has actually been, a lot of the history of modern money, not or pre-modern money, but just all the way through modern money. And so we're not done with experimentation and innovation at all. And I am very long on Bitcoin. I'm very long on Ether. And there will probably be other really compelling digital commodity monies that emerge. And I believe that they'll get more and more monetized. People will hold more and more value in them. They'll have more, effectiveness in exchange. But that's a long road, right? That's a multi-decade road. And so, there's sort of the here and the now. And how do we light up, the power of the biggest currencies in the world to take advantage of what's happening with crypto and the crypto economy and digital currency and all that. And at the same time, you're seeing this other phenomenon emerge that will be a multi-decade phenomenon. And I think they'll meet more over time.
While we're on this, can you speak on your thoughts on Bitcoin and Ethereum? I call them the blue chips of cryptocurrencies. I think you recently called Bitcoin going to 1 million. Of course, I'm sure it was out of context, but maybe you could talk about that. And then separately, just as Ethereum, and then I want to maybe get into central bank currencies, but go ahead.
Yeah. So, like I said, I'm very long on Bitcoin and Ethereum. And my view continues to evolve. And I think I have not held the same view always, but my view today is that the demand in the world for non-sovereign commodity money, digital commodity money, will grow. And the comments I was making actually in that interview were that I think a lot of times the analogy of Bitcoin as digital gold, I actually think that's a very limited analogy, because I think the utility of Bitcoin is so much higher than gold. And because of its operating efficiency, right? Because of its transactability, its usefulness as a form of financial collateral, its usefulness as something that can be transacted, it has so much more utility. And I think the demand for that non-sovereign form of money that has a strong sound money basis in it from a monetary philosophy perspective, I think that will continue to be attractive. And that will continue to be attractive in a world where governments spend more than they collect, and where many governments, are increasing their money supply artificially. That will continue to be really attractive. And so, with that in mind, I believe more and more major institutions will hold things like Bitcoin and Ethereum. I think more and more central banks will start building reserves in it. I believe more and more countries will subsidize mining, and they'll have other policies around it in terms of carbon offset and the like. But I think we are on that path to this becoming something that is an important asset in the world. And for that reason, I think $1 million is not an unreasonable price target at all. And I haven't, there are a lot of analysts that'll come, here's all the ways in which it's X% of this or that market or whatever, you can get there. But just intuitively for me, when I think of where it is today, approaching $1 trillion, right, to the concept that in 10 years it could 10X, I mean, that seems totally straightforward.